Nevada's unemployment rate is plunging. Time to break out the champagne? We'll get an expert opinion on the Silver State's fortune. Plus, scandal-plagued Senator Jon Ralston's seat is up for grabs. We'll weigh the pros and cons of the contenders for his seat from both parties. And we'll take you behind the day's political headlines. It's all next on Face to Face.
This is Face to Face with Jon Ralston.
Well, welcome to Face to Face. We'll bring you newsmakers and commentary you won't find anywhere else. Let's start with a look behind today's political headlines. Is Nevada about to go where no other state has ventured? Lawmakers are taking up an internet poker bill today. It's being touted as an intra-state measure, but it also allows Nevada to enter into pacts with other jurisdictions where interactive gaming is not prohibited, all without conflicting with that pesky federal prohibition. Well, this measure is the work of Assembly Majority Whip and Judiciary Chairman William Horn, so it has a good chance in the lower house. I hear the gamers are split on the measure, though, and the lawyers haven't ironed out those legal issues yet. Web poker giant PokerStars.net is pushing this through its lobbyist, former Speaker Richard Perkins. So this is going to be quite the spectacle before it's over. News that UNLV is cutting its social work department prompted UNR officials to take that school's social work program off the chopping block. Now, while that doesn't solve the problem for students in the South, UNR officials say the move preserves the ability of Nevada students to obtain a degree in social work. Now, there are 1,000 cut stories in this naked state, and this is just one of them, although a compelling one. Expect to hear more of these as the days and weeks go on until the Democrats present their secret tax package to fix it all. The jobless rate throughout Nevada fell in January, not because more unemployed have found jobs, but because those seeking work have quit looking. Statewide, the unemployment rate fell 0.7% in January from the previous month. In Las Vegas, the rate fell a whopping 1.4%, and in the Reno-Sparks area, unemployment fell 0.5%. Joining me to talk about the job and the jobless rate and other economic news, consultant Jon Ralston. He's also chairman of Nevada's Economic Forum, which is responsible for projecting numbers for the state budget. Welcome back to the program.
Thank you, John.
So you look at these numbers, new unemployment numbers that came out today, Mr. Restrepo, and on its face, 13.7% in Las Vegas. Haven't heard that in a long time. 14.2% statewide. Is it good news, bad news? Is it really just misleading news?
It's a little bit of bad and a little bit of misleading. I think
nothing good? You can't find anything good here?
Well, it's lower than it was the last time. But the reason why it's lower, not necessarily good. So it depends on how you want to position it. What we look at always, John, is job growth, month-over-month job growth, year-over-year job growth. And those numbers are still pretty anemic. They're growing a little bit, but they're very anemic. And so what we can say about the state of the economy today is it's not declining as bad as it was in 2010, and 2010 was not as bad as 2009. We're just kind of bouncing along the bottom. And it's going to be like that for a while until at least 2012, in our opinion.
There was some speculation in the release that came out from the Department of Employment, Training, and Rehabilitation today, which is responsible for these numbers, that people have stopped looking for work in this state. And the speculation was that maybe some of them or a lot of them are leaving Nevada. Do you have any evidence that's going on?
Just anecdotal. You hear it through the industry people and folks in the business community say, I'm just giving up and leaving. Or they don't get cut in numbers because now they're freelancers or consultants or whatever they position themselves to be, so they're not showing up in the wage employee numbers. So there's a variety of things that have been in place, but I think you're right. It's a combination of people leaving and not going back to work for a company, just trying to be entrepreneurs themselves, so they fall off the numbers. Now, whether they're successful entrepreneurs or not, that's a different issue, but they're trying to make their way in a non-kind of traditional type of job situation.
Well, let's go back some of the years since you talked about it. You go back to 2009, go back to 2010, and then now you come to 2011. Has anything really fundamentally changed in the economy here?
No, not really, other than this, and I say this a lot, and sometimes folks don't like it, the government sector is an economic sector. And the fact that the states that have any severe budget problems like they are in many other states has a drag on the economy. So we're having a couple of drags on the economy now that we didn't have before. We have the state budget crisis and potential layoffs and what that'll do to slow down the recovery. The housing market is still in a potential second dip, recession in that. And the two new ones that that will come up recently, the gasoline prices went up 28% in L.A., and they influenced us quite a bit, and food prices, commodity prices. So there's a lot of squishiness and a lot of haziness out there.
Well, you mentioned the housing market. Let me show you the newest statistics on foreclosures from our Realty Track, and this comes from the Las Vegas Sun. February's foreclosure filings fell 22% compared to January, fell 13% from February 2010, and that's from Realty Track. Nevada had one filing for every 119 housing units, which topped the one filing for 178 homes in Arizona. The reduction in filings mirrors what happened throughout the nation in February. Filings down 14% from January, 27% from February 2010. The nationwide decline is the biggest year-over-year decrease since Realty Track started tracking foreclosures in 2005. But you didn't sound as sanguine about the housing market here.
Well, because it's not based on the recovery of the housing market. It's based on the residual impact of the robo-signings and the banks pulling back and reviewing their documents and the paperwork that's all involved in it, so slowing down the foreclosure process, as opposed to consumers out there buying and real economic activity occurring. So always look behind the numbers. So yeah, it sounds good on first blush, but I don't think it's particularly good news.
Let's look behind the numbers, and this is what you do for a living. And to kind of put a twist on the old John McCain saying, are the fundamentals of this economy still unsound here in Nevada?
They're improving, but they're still very weak.
How are they improving? And what's causing them to improve?
Well, it appears we've reached some bottom. If you look at all the indicators, whether the general indicators or the real estate indicators, all the indicators all have a same pattern. Now it's a climb in the boom, a collapse in the bust, and now coasting along the bottom. And that's where we're just bumping along the bottom.
How do you know it's a bottom?
That's the question, right? Is it a floor, or do we have a trap door in the floor? We don't know that yet. That's why 2011 is going to be a really, really telling year for the next 9 to 10 months. If we continue to coast along the bottom, 2012 should be really the first year of the recovery. There's a lot of stuff out there, though, that has me still a little bit concerned whether we'll take another dip. I don't think we'll collapse again, but we'll extend that, slow down that recovery, as we mentioned earlier, those drags.
What kind of policies at the national level and at the state level could affect that most dramatically, would you say?
Tax policies at the national and state level, whether we invest in infrastructure at the national level and at the state level, what goes on in terms of the confidence and the feeling of uncertainty of businesses, and they're uncertain about what government's going to do. No taxes, little taxes, lots of taxes, what the banks are going to do. A lot of it right now is just uncertainty about the future because everything looks so hazy. And every time we have a bad indicator like we're having right now with the gasoline prices, just when we think things are starting to stabilize, all of a sudden this hits us. So everyone pulls back.
You can't even give us good news with the dropping unemployment numbers for crying out loud.
They're great.
Okay.
Hey, I'll put it straight. We're 86% employed. How's that?
86%. That sounds all right. When we come back, I want to talk about what this means for the state budget potentially or not. As I mentioned, Mr. Restrepo is chairman of the Economic Forum. I think he wants to give his revised forecast right here on this program about 2 months early. He's going to do it. I'm telling you. And later, we're going to talk about the race for John Ensign's seat with a couple of experts. Stick around.
If you want to comment or have missed a program, just go face to Facebook with Jon Ralston, where you can click on links to the Las Vegas Sun, find John's columns, his blog, and links to past programs.
Welcome back across Nevada to Face. Is Dean Heller a lock to win John Ensign's seat? Will Shelley Berkeley get into the race? We're going to have a couple of experts to answer those questions, or at least pretend they know the answers in a few minutes. But first, we're talking about the economy with Jon Restrepo, an economic consultant and the head of the state's Economic Forum, which tells the legislature how much it can spend. Let's talk a little bit about the state budget and what's going on. You've actually done some work also in the area of economic diversification and development. You put out some thoughtful pieces on that. Isn't there a nexus between diversifying the economy, developing the economy, redeveloping the economy, and the policies that this legislature is about to adopt?
Yes.
Okay. Go on.
Okay, you want me to elaborate?
Yeah, I would appreciate that.
Yeah. No, yes. There are a lot of links. There's the short-term links of getting people back to work and how you do that, whether it's through infrastructure investments and retraining of folks and all those sorts of things. And then the longer-term issue of how do we mitigate the next downturn by having a more diversified economy. And what that speaks to directly to is the quality of the labor force, the higher ed investments, and also investments in workforce training.
They're not investing in higher ed. Have you noticed the budget? They're gutting higher education.
I understand
Neil Smatresk, the president of UNLV, and Milt Glick, the president of UNR, have presented these plans now that essentially are going to destroy the university system in some people's eyes. I know all my conservative friends are yelling at their TVs now. And CSN essentially is going to lose the bulk of its funding, may have to close down campuses. How is that going to help diversify the economy?
It's not. It's not, and we need to really understand what our priorities are. I know there's a big push right now, for example, to employ construction workers and do all those things, and that's important to get the short term, get us kind of as a bridge to the recovery. But let's not do it at the expense of higher ed. I think some of the money is going for some of these infrastructure projects are taking away from higher ed. So we need to kind of balance what our priorities are, both the short-term need to create jobs to get us as the bridge, and also the long-term strategy of what we want to be when we grow up as a state.
They won't discuss both together, though, Mr. Restrepo. It's all about the short term.
Well,
how can we just make it past this session, balance the budget, and then we'll worry about it later on?
And that's always been a challenge. It's the same challenge when we talk about the budget deficit. Do we have a cyclical budget deficit, which we do? Is it a structural budget deficit? Which we're not as bad off as other states in terms of the structure, but everything gets lumped in together. It becomes a very left-wing, right-wing discussion, and kind of the adult conversation in the middle often gets lost in all the polemics and all of the positioning. So, but yeah, no, we have some very, very big challenges facing us, and I don't know if I can tell you there's a business community is now talking a lot more. There's no more of this irrational exuberance that we used to see, and all lip service played to economic development and economic diversification. That's changed a lot in the last year. But I'm not sure completely that all our elected officials fully understand that the challenging times we're in and how important education and workforce development is to attracting companies here.
Irrational exuberance. Are you the Alan Greenspan of Nevada, sir?
I think so. Is that good or bad?
I don't know. Harry Reid called him a hack. But that's a different program.
Well, I've been called that too.
And he's getting blamed for a lot of the problems in the country. You are the chairman of the Economic Forum. In case people don't know how this works, you make the projections, and you did it at the end of the year that they had to base, the governor had to base his budget on. You come back in May, and you look and you say, okay, we were right on this, we were wrong on this, we have to readjust. From what you know so far, and I know it's 2 months away, does it look like you're going to have a more rosy scenario? Because you don't sound too rosy right here.
Well, it depends. Are you define rosy as not being realistic?
I'm defining, you made these projections, you were conservative, right. I think, the entire Economic Forum, you all vote on it, it's not just up to Jon Restrepo. You were fairly conservative. Do you think, based on what you know right now, you're going to have to make this in less than 2 months, are the significant revenues going up enough for you to change your projections?
We don't know yet. I'll give you the non-answer answer. We know that, like all forecasts, they adjust because reality sits into play. For example, we didn't anticipate what was going to happen to gasoline prices and food prices 6 months ago or 4 months ago.
But really, this is all about gaming and sales taxes, sir. This is really whether or not.
But they influence spending, consumer spending.
I understand that, but you know how those are coming in so far,
right.
and they have been coming in a little bit better. Am I correct?
Well, yeah. You know, for example, today we had the gaming report. The taxable sales, the taxable gaming revenues went up about 9%. Year over year, January to January, but you have to look at that a little closer. Januaries of each year are the markers that come in from December. So it looks like a big boost, but after you take out the seasonality of that, it may not be. So we need to really look at February, March, April. Hopefully we get close to May as we can before.
What do you hear? What are the atmospherics out there? You talk to people. What do you think's going on?
Uncertainty. A hope that we have flattened out, but not anyone saying we're going to see a V-style recovery in the economy or in revenues.
Brian Sandoval suddenly has a $100 million hole in his budget because of some miscalculation with the bond, and they're hoping that the Economic Forum is going to help them out. So are you going to rejigger your numbers so Brian Sandoval can balance his budget?
Do you really think that's going to happen?
I don't know. You tell me.
No. We'll follow where the data is telling us as a group, and we'll see where the forecast.
You think he's right to depend on a positive, a more optimistic forecast in May? You think he's right to depend on that?
I think he needs to depend on realistic numbers.
All right. Mr. Realism, the Alan Greenspan of Nevada, Jon Restrepo.
Thank you.
Thanks for coming on the
Thanks, John. Thank you.
When we come back, John Enson's seat. He's said he's not going to run again. What kind of dominoes are going to fall? We'll talk to Steve Wark and Dan Hart for their insight when Face to Face returns.